Hey traders and investors, it's Serge Berger here. Today I want to make a real quick video and let you know about something that I've learned about secular bull markets from some of the old hairs in this business, but also very wise hairs that I think will be of great value to understand, at least for perspective. And that really has to do with the fact that when you get into a secular bull market, which I remain of the opinion we are in, here's the chart of the Dow Jones Industrial Average. I'm going to make it a weekly chart, so with weekly bars. And the fact is that secular bull markets tend to see very few corrections, quote unquote, of more than 5%. You get the occasional 9, maybe 10% dip, but you don't get those a lot. You don't get a whole lot of like 15, 20% corrections, and if you do, they tend to last pretty quickly. So this is something that's to be kept in mind. Basically, what it'll tell you is that one of the easiest and best strategies to work in a secular bull market, which again, I personally am of the opinion will remain in here for another few years, then quite simply, one of the easiest strategies is just to kind of buy and hold, or at least sell at the upper end of the ranges and buy again at the lower end of the range. And if you look at the Dow Jones Industrial Average, if you want to look at a very straightforward way of looking at this, again, this is very, very straightforward. There's no rocket science. There's obviously, a little bit more technicality that one can overlay in this kind of stuff. But if you look at the very basic uptrending channel for the Dow, if you kind of connect the most points possible, you can do something like this. You can draw another, it doesn't really matter how you draw it. The point is, when you get to the upper end of the range, you're a better seller, and you get towards the middle or lower end of the range, you're a better buyer. And so what that will do, in the best way I have found to deal with secular bull markets in that sense, is that you basically deal with them by having a core portfolio that you can kind of trade or invest in this fashion. So you buy at the lower range, buy at the upper end range, and you kind of keep that portfolio. And at the same time, you look for sort of more, near-term trades within the context of where we are. So for the bottom end of this range, you can take smaller cash flow trades for, and get some real leverage on the way up, which would be something we'll be talking about in a webinar later on this month. Stay tuned for that. If you got any questions, head on over to thesteadytrader.com and check out our trade alert service. And if you got any questions otherwise, you can hit me up on Twitter. My Twitter handle is SteadyTrader. And I'll see you in the next video.